as well as India and Thailand. Above that is the EU and then Canada. The EU and Canada also other substantial corn use markets. Overall, looking at a 16% decline for those other markets, US expected down about 20 to 25% year over year. Looking over the past 7 years, we can see that production has steadily increased from about 90 billion liters in 2013 to nearly 120 billion liters in 2019, largely supported by policy developments in these countries. And because of COVID-19 and this loss of demand have essentially pushed production levels down to where they were in 2013. Now, from the US standpoint, weekly production data provided by the Energy Information Administration shows that production is down by 49%. Stocks are at 16% of where they were over the same period last year. If you look at the chart on the left, this is a line graph showing production data on a weekly basis over the last 5 years. And that huge drop that you see after March in that blue line, that's 2020. It almost looks like someone input data incorrectly into that chart or into that time series. That is in fact the correct data, but it's frankly a reverse hockey stick, or reflecting that 50% drop in gasoline demand in the United States. On the chart on the right, this is the weekly stocks for fuel ethanol in the United States. They're up 16%, but globally we have seen that storage pressures will weigh heavily on the ability of the industry to return to producing again. Certainly that's the case in the United States, but also other countries that have even greater losses in gasoline demand, upwards in 65% or 70% in some markets, and storage pressures are going to continue to mount for those industries and their ability to come back online. Likely more production will come offline in order to ease some of that pressure. China is the next largest user of corn for ethanol after the US. In 2019, they produced 5.7 billion liters using about 9 million metric tons of corn for a nationwide about 2.5% blend rate. They had 7 provinces that were already had mandates in place, another handful that had partial mandates. And then really the big change in China though this year, not necessarily associated with COVID, was the announcement that the 2020 implementation of a nationwide E10 mandate would not in fact go into effect. There's multiple factors there. One, of course, being some of the easing of corn stocks in China, which really spurred the implementation of that program, but also lack of market access or lack of access to product from the US with a 70% tariff that US exporters have faced there for the last 18, now almost 24 months. Other producers, facing a 30% tariff under the MFN rate. And so, both of those have weighed on the Chinese ability to meet a nationwide mandate, but yet there still is potential progress as these individual provinces continue the rollout of their policies. From a Brazilian standpoint, corn ethanol is a very new industry. 3 years ago, it doubled from what it was, and last year it doubled again, producing 1.4 billion liters of ethanol, which now has about 5.5% market share in the Brazilian market, or using about 3.4 million metric tons of corn there. So far, reports for April are that ethanol sales are down by about 1/3, largely weighing on the sugar sector that was under a lot of pressure due to bankruptcies and other challenges, logistics challenges in Brazil. And so the industry ask has really been focusing on tax relief, whether that's an grade C gasoline, which is the blend of 27% ethanol with gasoline, or a tax decrease on hydrous ethanol. They've looked for some other measures as well, as far as direct support to ethanol plants as well as producers. And it remains to be seen, what relief that industry will get. But for the most part, while the corn sector, while overall demand has declined, the corn sector will not face as much of the structural pressure that the sugar sector will in Brazil. Attributing to that is in part is the rise in flex plants, where you have both sugar and corn can be used as a feedstock. Corn is able to be used in the inter-harvest period for sugarcane, contributing to reduced expansion costs as Brazil has implemented their new Novo Bio policy at the beginning of this year that's looking to significantly expand demand for ethanol in Brazil over the next decade through tradable credits as a measure to meet their overall carbon intensity reductions under their Paris Agreement commitments. Corn is eyeing a significant expansion in that market, in part spurred by favorable margins in Mato Grosso and likely surrounding regions, looking at potentially a 20% market share over the next 8 years to 8 billion liters. That would be a significant development there. Again, also further putting pressure on the sugar industry, as well as further conversion of plants to allow feedstock. It is expected to maintain positive market share, in part because it is favorably valued under Renewable Bio due to double cropping. There's no till, as well as using renewable feedstock in the boilers of the ethanol plants there from eucalyptus. From a trade standpoint, global trade in 2019 was slightly down from the record year in 2018, down to about 9.5 billion liters. The US still holds about 60% market share, which it's had for the last 3 years now. That decrease in overall trade in 2019 was due primarily to market access barriers. Again, 70% tariffs in China impacted market access there. A TRQ in Brazil impacted US market access, but also sugar price decline further weighed on Brazilian demand for imported ethanol, as a lot of their cane was diverted to sugar production in that country. For 2020, the expectation is that global fuel ethanol trade will decline. Industrial use will also decline, but to a much lesser extent. Over the first 6 months of the current marketing year, US ethanol exports are up by 3% at about 3.1 billion liters. However, with 3 of the top 4 export markets for US product being for gas or fuel ethanol, being Brazil, Canada, and the EU, that number is expected to drop off pretty precipitously as the impacts of demand loss and COVID-19 are realized subsequent months. So that's certainly going to weigh down overall trade from the US and globally. And then the industrial use sector, primarily India, South Korea, Nigeria, and Saudi Arabia, those markets will decline somewhat as their economies slow, but certainly not at the same rate as this 50 to 60% demand drop in gasoline that we've seen in other markets. Beyond 2020, policy implementation will be key. We've certainly seen pressure on current policies in place, and a number of countries have announced expansions or new policies. And so, how elevated those policies are able, or the role those policies are able to have in government discussions remains to be seen, given, likely a lot of pressure from other economic failures that have occurred in countries, health issues, and other aspects. So looking at those policies, as I mentioned, a number have had expansions or announced expansions over the last 2 years, but those implementations have already started to be delayed. Looking at Canada, From a federal standpoint, the Clean Fuel Standard, the draft policy has been delayed from delivery in spring of 2021 to fall of 21. It's still expected to go online in 2022. However, that policy has seen delays before, and pushing up against another presidential election may face similar delays. At a federal level, Ontario and Quebec have announced their intent to move to a 10% blend by 2021, or 2020 and 2021 respectively. Their draft regulation to move to 15% by 2025 has come back with a new timeline of potentially not getting to 15% until 2030. So that certainly weighs on further demand, both from the Canadian feedstock producer side, but also US product that also is exported to that market. Bolivia, their E25 delay, or their E25 program by 2025 has been delayed as they're dealing with their own political turmoil and a new government that's going into place. China, I already mentioned those delays, but also the Philippines. Their original policy, they were supposed to go to a 20% blend in 2020. They are now looking at possibly only a 15% blend, or further delaying the implementation of a 20% blend for a timeline that is unyet specified. That's a market that produces a little over 60% of their demand, and then imports the rest primarily from the US. So that policy progress or lack of progress will also weigh on trade. Vietnam was looking to implement an E10 policy by 2020. That is likely being pushed back to 2021. And so, we've certainly seen slowdowns in these policy developments. And then some of the newest policies being in South Africa, looking at potentially an E2 blend, or Australia, who is now looking at taking information for a draft regulation for a bioenergy roadmap that could potentially expand ethanol use outside of the two states of Queensland and New South Wales. Could potentially be positive developments again if these policies still have talking space within the crisis that is COVID. Looking forward, the factors that are going to impact ethanol markets post-COVID are really demand. There's really a lack of understanding at this point on what a second wave reaction will be. Many governments were criticized for the delay in which they had for implementing the initial quarantine or initial lockdowns in their countries. And so likely as cases start to tick up, there will be a much swifter reaction in shutting down those economies, which will further weigh on demand for gasoline and ethanol, as well as the timing for a vaccine. It's unclear if a vaccine will be able to be produced by the end of this year, if that's sometime in 2021, which will continue to weigh on that impact and impact the second wave. Readjustment to social proximity. Right now, the world is told to stand 6 feet apart with a mask on. I think it's going to be difficult for a number of people to, get within 3 inches of someone sitting on a plane for a number of hours, or, even getting on public transportation or other modes of transportation, or, frankly, getting back to work. There's been a number of learned behaviors and recognition that some work can be done from home. And so that will further weigh on, how quickly demand comes back online. And I think, this last demand impact, we're just starting to see some global unrest underway, whether it's from unemployment, deferred payments, access to fiscal support. These impacts have not been fully realized. And so they will, that civil unrest that ensues will certainly impact, governments' reactions and potentially changing governments as a response to, these societal issues. But also we've seen food access issues that will further stimulate this unrest with, the Black Sea slowing down exports of grain and grains, rice exports being slowed out of India and Southeast Asia, similar to the reactions that we saw in 2008 and 2012. So that will definitely impact all of these other issues, and will have long-term impacts again on overall demand. From an industry standpoint, again, I mentioned this pressure that's on the current and future policies. Certainly in the U.S., we've seen pressure on the renewable fuel standard, asking for waivers for that. The EU is facing similar pressures, asking to waive blending requirements under RED. And future policies, again, is there space to talk given the health concerns for COVID and the population? Industry bankruptcies and consolidation, this is absolutely going to happen. Having a plant shut off for 4 months out of the year, 8 months out of the year, likely upwards of 12 months, is certainly going to have a huge negative impact on balance sheets. Certainly the increase in price of DDGs and the ability of some plants to make hand sanitizer and other industrial grade ethanol is going to ease that somewhat. But as from the U.S. side, no direct industry support that's been identified so far. And so those structural changes will occur. Climate change or discussions around climate, that will impact these policies as well. When do they come back on the agenda? Is there a wavelength for discussing those? And then, it all comes back to feedstock producers. These are the 5 largest users in EU as well of corn for ethanol production. The damages of this impact are not fully realized, certainly putting a lot of pressure on the feedstock producers to maintain grain quality as their contracts have been canceled from ethanol plants. So, a lot had, grain left over from last year. And so, we'll, continue to have those stockpiles and need to maintain that quality, even as this record crop is likely to come online this year. So with that, I'll turn it back to you, Tim, for any questions.
Thank you, Brian. There are a couple of questions teed up already. I have one myself though that's kind of been buzzing around the back of my mind for a while, and it's just been such a dramatically difficult year for the US, given the planting conditions at the beginning of the marketing year, or this point last year. Some of the turbulence around trade relationships, etc., it's almost biblical in the sequence of events that have unfolded. This must, like every year is different, but this must be quite unlike any other year you've ever experienced before.
For sure. Yeah, you're right. The planting conditions last year were difficult. Trade relations and losing market access, or having pressure on market access to a lot of our typical export markets has been impacted. And overall, some of the most difficult economic conditions in the rural economy that the U.S. has seen in more than a decade. Some people are looking at it as the farm crisis of the 80s. It is, the nexus of a bunch of terrible things all at once. It's extremely difficult.
We have got a couple of questions. Again, for people who are watching us and have joined us from your homes or from wherever you may be, please do take the opportunity to fire us a couple of questions throughout the presentations. We've got one here which refers to some news that is maybe just breaking about the FDA, which I'm guessing is a federal agency, which has stopped the use of ethanol in hand sanitizers because of concerns over health. Is that something you've heard of? Does that have a thing for ethanol? Is that a factor that ethanol producers are going to have to think about?
Yes, so that is one of the regulating bodies for using ethanol for hand sanitizers or human purposes in general. My understanding is that they earlier in the year relaxed the regulations to allow those companies that had not been traditional producers of industrial grade ethanol for hand sanitizer to allow the permitting process to go through. And there was some concern from producers about how FDA would enforce those policies, whether or not they would require more stringent requirements. Certainly, need to make sure there's no benzene content in there or other harmful, carcinogens that impact human health.
I guess as a relation or a question that relates to that is how much ethanol do you think will be diverted for sanitizer production in the US in 2020?
Yeah, I've asked that question to a number of people. I've gotten a wide range of market sizes, everything from 60 million gallons to 300 million gallons. So certainly if you're losing 3 billion gallons of demand from the gasoline market, it's not going to make up that difference. But it certainly can help some of those plants that are able to, help them keep workers online and not have to furlough them if they're able to meet those requirements.
Another one, in developing nations, with the move towards food packaging in the future, post-COVID-19, do you think the demand for ethanol for industrial purposes will increase and its share in overall trade will go up? And if so, by how much?
Well, certainly. So right now, ethanol as a component of bioplastics is only about 1% of the global plastics industry. You see it in bottles, whether it's a Coca-Cola bottle, some of the packaging that you mentioned. The hope is that as governments are aware, especially putting on plastic bag bans that we've seen in East Africa and other nations, you've seen taxes on plastic bags. There's an awareness of plastic that there hasn't been before. And so that's certainly a market that we as an organization are looking to grow and are actively trying to expand that and be involved in those discussions with the bioplastics industry, as well as the Chemistry Council, bottling groups, as well as the multilateral groups in the EU that weigh in on those discussions.
Excellent, thank you. This is a question that goes back to 2008, 2009. There were many US bankruptcies in the last big economic challenges that we faced. Have you compared the conditions from that period to this period, and can you forecast, based on that research, what the impact could be under these circumstances? And I guess before you answer that question, the US ethanol industry today is very different to the one that existed even 10 or 12 years ago.
Right. Yeah. Well, I mean, the U.S. industry was frankly still being built out at that point as a response to the renewable fuel standard. I think the big difference is there you had $141 per barrel oil, and today it's almost $10 a barrel. So there's there's that significant disparity, and so the crisis is not only weighing on the ethanol industry. So it's not only weighing on the ethanol industry, it's weighing on the other component industries that are impacted as well. Certainly that time period brought on a lot of discussion, food versus fuel, because that drastic increase in oil prices, really lifted the prices of all commodities. And so, those were some of the restrictions and exports that I mentioned of key commodities for feed products around the world as well. As far as consolidation in the industry, again, I think that was an adjustment period for production facilities coming online, whereas now there's been much more settling within the industry. There has been some consolidation in the last few years, but expecting that consolidation to continue not only in the US, but in Brazil and other countries.
And a final question. Oh, no, another one's just popped in. I'm going to keep you on there for just a bit longer. Do you think that the falling demand in fuel ethanol will encourage some producers to switch production to food-grade ethanol?
I think to an extent it will in a short-run time period, or at least encourage them to get the permitting requirements settled to meet those. regulations, but overall, you know, the difference in demand and the size of plants that have been set up in the U.S., I mean, aren't really conducive to making necessarily a bunch of niche market products when, you know, you're expecting to produce 300 million gallons a year for the fuel market, for example. So, you know, you lose a lot of scales of production in moving to that market. But it's, again, it's certainly our hope that, and you know, our effort to expand the industrial market to be responsive to some of those changes that likely will in fact occur.
A question, it's a tricky one. This is a more of a trader's question, I guess, is have you heard or do you know if ethanol plants have taken long corn buying positions? And if so, do you know from when? I mean, that's going to require investment. I guess with the previous question as well, these all require cash that maybe the industry isn't perhaps all that comfortable spending at the moment.
Yeah, I don't have too much information on that. I've gotten some feedback from some plant operators that they are the shortest they've been on corn in a long time. But as far as someone taking, you know, extremely long positions, I don't have any information on that, unfortunately.
Okay. No problem. Thank you very much for that. I'm going to sweep away these questions and we shall try and switch over. I will try and put my presentation up in front of you. Bear with me one moment. This is an old man struggling with technology from home. There we go. And hopefully that can be seen now on the screens. Brian, thank you very much for your time. Please do stay with us for a little bit longer in case there are any other questions that come through. I'm going to pick up hopefully where Brian left off. There's a little bit of overlap, I noticed, in some of the slides, but hopefully not too much, and try and pick up where Brian left off to look at what has happened with US corn and its impact on the global corn, because I think it's one of the things that for a lot of people within the industry, the connection between US ethanol, US driving, and the global balances for corn is not always immediately apparent. So I have a series of points I'm going to rattle through, hopefully quite quickly, talking a little bit about some of the experience that the US has faced in the last few months, and how it has been squeezed out of sort of typical markets, perhaps in the export sense and in the domestic sense. A quick look at Brazil, China, and their ethanol experience and what that means for corn. Brian's touched a little bit on logistics limits and some of the other areas that are going on, but I'm going to talk a little bit about logistics limits and levies and how that's impacting the markets. And then finally, I'll wrap up with looking at some of the potential situations that could unfold in the 2021 next harvest as farmers are planting now. So starting with the squeeze in US exports, the chart here, we're looking at the marketing year, and it's the grains inspected for export. So it's the data that the USDA provides. The dark green in the foreground is the current marketing year pace. The light green in the background is last year's marketing pace, and you can see that fabulous start that the US had last year in export terms was completely lost at the beginning of this year, and that's the overhang of some of the weather conditions, some of the weather concerns that the US was continuing to feel. So corn was planted late. It felt like it rained pretty much from February right through to April and into May for much of the Midwest. So corn was planted late. A significant part of it was planted well after the typical last planting dates, and that meant that the harvest ran on. Even the use of shorter hybrid varieties of corn meant that the harvest ran on well into October, November. So the prices were particularly high there, and the US was priced out of many of those key export markets. It was an opportunity really for South America, for Ukraine as well, to capitalize on that. And you see a big surge of exports coming from those rival regions as the US is nursing its particular domestic fears. So the weekly inspection pace clearly lags in previous years. The domestic worries sharpen the competition. But as we start to get through into the late part of 2019 and early 2020, some of those dynamic shift. You start to get the US becoming competitive, and really as the meltdown in ethanol production starts to settle in, you see an impact on basis prices for US corn, and you see that pace starting to pick up again and capitalize to some extent on the issues that are facing the ethanol sector. And what you see through the latter part up until the recent to the current month, you see Japan, Mexico particularly swooping into US corn, South Korea returning as well, some of the traditional buyers starting to return to the US market again. So that's all down, and this is a familiar slide because you'll see this, you've seen this already in Brian's presentation. That's all down to what's happened domestically within the US. And this is the same chart that Brian showed a moment ago, but this time we've translated it into an approximate weekly usage for corn that goes into the ethanol grind. In this slide, you've got the dark green line is the current marketing year, the lighter green line is last year's marketing year, and the white line through the middle is the sort of 5-year average. And you can see that there were all sorts of issues that the US ethanol sector was already dealing with. One of the particular ones was the growing use of waivers. So a provision within the renewable fuel standard that enabled refiners to actually avoid paying or avoid blending physical biofuels into their road fuel supply, citing economic pressures. Typically, this was targeted at small refiners, but what started to happen is that they were broadened out into bigger refiners, part of much bigger, much more profitable companies, and that caused an awful lot of pressure, an awful lot of concern for the industry. Many of the industry's lobbies were very active, pushing for some clarity and some clarifications around the oil sector's use of this waiver scheme. And while that has played on in the background, the sector itself had very little option but to minimize and start closing down perhaps harder to run plants that had poorer margins. And you can see that through the early part of the year. The green line is well below the last year's pace. But again, it reaches a stage where the US starts to bounce back again. Driving demand is picking up. The ethanol margins, production margins start to pick up, and you start to see the weekly use for corn start to reach levels that haven't been seen for a while. So it's on the cusp of turning a relatively bad start to the year into a stronger start to the year, and then suddenly the impact of lockdowns, the impact of people physically being told not to use their cars is really felt. And you can see that the really precipitous drop in demand, what that equates to in corn terms by our estimates, and we're using a rough formula that translates 1 gallon of ethanol into 2.8 bushels of corn. What that translates to is that the first half of the marketing year, on average, through to mid-March, around about 2.7 million tons of corn was being used every week within the corn ethanol production sector. With the collapse, that slows down dramatically, and you can see that now around probably between 1 and 1.5 million tons of corn is being recycled back into the US balance every single week. At these levels, around 1.43 million tons of corn goes into the grind versus 2.7, 2.8 at the beginning of the year. And that's something that's really going to be felt quite quickly in balances, and I think a lot of people are expecting that already. But just to say, as long as this continues at these sorts of levels, between 1 and 1.5 million tons of corn is being returned into the weekly corn US balance. This is likely to continue. I think it's pretty much set for all of April. It's likely to continue for most of May as well, and potentially beyond as well. It is going to take time to ramp up to levels that are seen before the lockdown. And there is a risk, I think, and Brian, maybe you can correct me if I'm overstepping here, but I think there is a risk that a significant minority of US ethanol capacity will never fully return to production. How that plays out in prices, these are some of the main origins. We've got green is Brazil. The yellow line is the FOB US Gulf, or the gold line if you prefer. The light blue is FOB Argentina, and the red line is FOB Ukraine. So all of these factors coming together again, and you can see at the start of this marketing year, corn is US Gulf corn is amongst the most expensive origin. It's effectively priced out because of those domestic production fears. Over the course of November, December, it starts to regain its competitiveness. You start to see that the US farmer has actually produced a substantial harvest again, 345 million tons. There were some concerns over the qualities of that corn, but price ultimately talks, and you see through November, late December and into January that the US is again competitive. And that kickstarts buying again from some of the key destination markets. As we get into 2020, US is in a fairly good tussle with Argentina. Argentina starts to take the initiative there as its harvest starts to come closer, but you get from late February, early March, you get the impact of the first fears as they ripple through the oil sector, as they hit the ethanol demand, as they spill over into corn. And you can see that, again, a dramatic drop. In part, what's happening there as well for the US is that the corn that was typically going into the local ethanol production facility is now heading to the river, to the Mississippi, and to the network of rivers that feed down into the US Gulf, and then supply the FOB markets. And again, the US becomes quite aggressively competitive. So you see that happen, and as that happens, there are similar fears that start to reach Argentina over whether the logistics, Argentina and Brazil, over whether logistics can stay open, whether ports are going to be able to manage, whether there's going to be lockdowns, or whether trucks can function, and whether that supply from the fields of Brazil and Argentina are going to get into the export locations. That starts to be reflected in Argentinian FOB bases, and again, America or the US returns as the sort of primary export origin. Across the bottom there, I'm a firm believer you can never have too much information in any slide, but across the bottom there is actually the US export inspections for the Pacific Northwest specifically. That's the key hub for the US that faces into the Asian domestic destination markets. Typically will load a lot of corn for Japan, for South Korea, for Vietnam, for other situations, other end destinations. And it had a remarkably quiet start to the year. Again, partly that's down to quality issues or quality concerns, but again, as the price drops, you start to see the PNW picking up again. And we're going to have a quick look at what that collapse in the corn price has done for end user buying through the prism of South Korea. South Korea is, I think, the third biggest corn importer in the world, behind Mexico and Japan, around about 11 to 12 million tons every year. And over the course of since the start of the marketing year, you can see a relatively, the slide on the left hand, the graph on the left hand side refers to the individual. There are 5 big associations in South Korea that do a lot of the buying: MFG, NOFI, FLC, KFA, and Kokopia, so a major feed mill group, Nongyup Feed Inc., Korea Feed Association, Feed Leaders Committee, and the Korea Corn Processing Industrial Association. They do a lot of the buying. They issue a lot of tenders. They do the private buying in South Korea. They were relatively inactive through September, October, November. And then as the corn prices started to come off, you can see really them stepping up. It's really spearheaded by MFG, who in April purchased nearly 1 million tons themselves. And that's roughly on par with what Korea will typically buy on a monthly basis for the whole country. But that really, as soon as one association makes that move, the others are kind of compelled to make the same move, because they've got to lock in prices at the same or better than their rivals in order to stay competitive. And over the course of April, as far as we can gauge through our own tracking of this trading, something like 2.2 million tons of corn has been bought. It's probably one of the biggest monthly volumes that Korea has imported or has purchased over the course of that period, over the course of a month. How it translates into deliveries, though, the next slide, the slide on the right-hand side, deals with when those cargoes are expected to arrive. Again, there's a little bit of guesswork associated with this. Some of them will have explicit ETAs. Some of them we've had to try and guess based on how long it takes to get from the likely origin into the destination market. And you can see it's actually fairly well spread throughout the year. Buying out as far as September and October has been fairly good, but with relatively expensive feed wheat, we probably are expecting the Black Sea to see, certainly it's had a very dry spell. There are question marks over yields or potential yields. There is an expectation that maybe Ukraine will produce more milling wheat than feed wheat again this year, which may well keep the price of feed wheat relatively high versus the price of corn. We've also seen DDGs taking a hit. So DDGs, dried distillers grains, which are a co-product of the ethanol sector and a part of the feed formulas that go into much of the livestock, their supply has been derailed a bit by the what's happened in the ethanol space, and prices have gone through the roof. So you could see a little bit more demand on top of that is buying to compensate for feed wheat or DEGs. Beyond that, into December, November, December, etc., yet to see much buying for the very end of the year, but that's possibly because FOB markets are not all that clear that far out yet either. Just coming back to prospects, and we touched a little bit on this, Brian touched a little bit on this in his presentation. This is something we discovered 3 or 4 weeks ago, is that the website, well, the company TomTom, who you may be familiar with, they do a lot of direction services for smartphones. So if you're using your smartphone and you're looking to get from A to B, chances are you're using the TomTom technology to get there. They are keeping track of all of this data. I don't know how well it comes across on this slide, but I've picked 3 cities at random from the US, Los Angeles, New York, and for Brian's benefit, I put Washington, DC in there as well. So you can see, if you can see, the light blue line is the typical average congestion tracker for 2019. You can see very clearly in most of those cities, you can see where the weekend lies, you can see where the morning and evening rush hour sits as well. And you can see as well that the actual red line is the last 7 days in comparison to that data. You can see that it is a long way off where you would expect it to be. In New York City, by the looks of it, on Sunday, virtually nobody drove a car, which must be unprecedented. But there are some signs of hope. And again, Brian touched on this a little bit. If you look at the data for Shanghai, the red line there pretty much sits right on top of the typical trading pattern, or the typical congestion patterns for 2019. Even Wuhan, at the very epicenter, I know China won't like me saying that, but Wuhan, at the epicenter of this outbreak, is almost getting back to normal. It's not, the red peaks there are not too far behind the blue lines, but it's still a mixed picture. And you can see with Tokyo, by comparison, traffic in Tokyo, and I took these late last night, so there are, it was probably, to be fair, it was about 3 in the morning, so I think it was unlikely that too many people were going to be out and about. But you can see over the last 7 days that the activity is still well below where it has been seen. But that's a sign, I think, that when the lockdowns do start to lift, people are going to use their car. They're going to use their car probably in preference to public transport if they have that option as well, because it just feels like when you're in your car, I'm not going to quote Gary Newman, but when you're in your car, you're almost self-distancing effectively. So it kind of feels like it's a safer environment. I think you can probably expect public transport to not to see a switch away to people driving. But set against that, it's hard to get away from the fact that the US ethanol space does have huge stocks. And I think it's 26.3 million barrels. It came down for the first time in 5 or 6 weeks, I think. So it's going to take a while to get through that. It was a fairly hefty drop on Wednesday. 1.3 million barrels was removed from inventory. I know there have been a few people concerned that perhaps the sector itself is running out of ullage and won't have the capacity to store much, to physically store much more, and that's certainly underpinning the cuts to production and the mothballing of much of the facilities. But at the current rate, if the entire industry shut down as of today and didn't produce any more ethanol, you'd still have basically up to a month of road fuel demand there, based at a rough guess of what the current demand is doing. But it's not just the driving space that has issues. I should hurry up a little bit because we're getting to the end of our hour. It's not just the US driving space that has issues. The meat markets have had challenges as well. The little pie chart in the bottom right-hand corner looks at the split between feed and residual, industrial use, between stocks and exports as they were in the current WASD. And you can see that the main graph highlights the growth in poultry and red meat to some fairly impressive levels. I think these are in £billion. Oh, sorry, no, the exports and the figure on the bottom between the next to the WASD outlook, you've got an estimate of exports and production, and you can see that exports are declining as production is running away, and that's part of the problem that a lot of people are worrying about. We have seen the president, Donald Trump, come out and say he is now classifying pork processing, meat processing facilities as key parts of the infrastructure that need to keep producing. I think one of the challenges has been that they have been producing and that they have become epicenters of COVID outbreaks themselves, and that's been one of the main issues. So it's going to be interesting to see how much influence the government can actually have in keeping these plants open. But in the meantime, it's causing such a shock back up the system that there are reports of perhaps hogs being slaughtered, up to 160,000 pigs per day, as the industry grapples to really get to grips with what's happening further downstream. That's going to have a knock-on impact for feed demand. It's going to have a knock-on impact for soybean meal, for corn, and for the balances at the end of the marketing year as well. Brian has touched a little bit on Brazil as well. In fact, pretty authoritatively on Brazil, so I won't linger too much longer on this. 2019 was a magnificent year for the Brazilian ethanol sector. It I think more than doubled its production. It's still a relatively small part of the whole cake, but there was, I think, up to 1.3 billion litres of capacity was expected to come online in 2020. There's now big question marks over that, and certainly the use of corn in the domestic setting for Brazil, there was an expectation that ethanol would take a significant chunk and a growing chunk. Domestic meat would take another chunk and a growing chunk. And last year, their export pace for Brazil was so intense that any repetition of that, you could actually start to look at Brazil having pretty limited stocks quite quickly into the new marketing year. I think, in fact, nobody's really worrying about that so much now. The bigger concern is whether the Safrinha corn is going to fail, or whether there are going to be issues with the dryness across some states. But either way, you can see I've got also in the bottom right-hand corner some data on Sapia's domestic prices and how prices were ramping up to, I think, record levels on a catalogue of issues that were worrying domestic Brazilians. But as it became apparent that COVID-19 was having an impact on end user demand, you see plants, some of the ethanol facilities in Mato Grosso start to destock some of their reserves in order to capitalize on the fact that domestic prices were so high. And then as it becomes apparent that potentially you start to hear about companies talking about force majeure, particularly on the sugar side, and question marks over whether this new capacity is going to go ahead. So you see that start to be reflected in perhaps less cataclysmic bottlenecks in supply. China, you do China in under 30 seconds. The slides across the top there, the pie charts are the proportion of soybean sales between the US and Brazil over the last 4 or 5 years. Certainly phase one has held out a lot of hopes. I think a lot of those have been quashed because of the onset of this disease. There's a ratcheting up of rhetoric between Beijing and Washington as well that is feeding into that. Brian also mentioned the ethanol sector. I don't actually know what status much of this ethanol sector is at the moment. It occurs to me, though, that if there's talk of 20 million tons of corn being imported or potentially being imported to meet or to restock China's own domestic stocks, if there is a slowdown in ethanol production, 87% of I think the USDA puts 87% of China's ethanol production as corn-based. If there is a significant slowdown in Chinese ethanol production in the same way that there is, that's also going to cycle back stocks back into China's balances. I won't touch too much on this. Again, there is a picture of burgeoning oversupply here because Ukraine, South Africa, they all have big crops. Argentina and Brazil likely to maintain big crops. And the US really, if it does plant 97 million acres, you're looking at a very big crop. So we are seeing a very well supplied market in the days and weeks and months and years ahead potentially. And that's just an illustration of how far Ukraine has reached just in the last month or 6 weeks or so. China, the big buyer, Egypt, the EU, huge as well. But you probably can't see it that clearly on this slide, but Korea is in there as well. There are destinations that the Black Sea has reached. We know that Vietnam is another country that Ukraine corn has reached in recent weeks that it hasn't reached before, or hasn't reached in recent years or months. Intervention as well, just a quick recap. There were fears at government level around the relative attraction of exporting for many of these markets, which triggered some fears that there were going to be limits placed on exports. I think for much of the Black Sea that was at the heart of this, many of those fears have been allayed. Governments have not imposed outright bans, they've imposed quotas. I think there is some question marks over Russia's quota and how that will play out, but Ukraine certainly has stepped back from imposing a quota on corn for the current process, largely and partly because Ukraine's competitive. It's not at the front line at the moment. You've got Argentina coming back, you've got the US back as well, so there are other options for destination markets. And just very quickly to run some of the numbers. So I put this together myself. I'm not an analyst, so I'm really just using. That's not a great way of introducing this, is it? Why? But listen, I'm going to switch off now. This is basically just using some of the key numbers to illustrate the potential impact that ethanol could have on balances as things unfurl over the next month and into the next year. And just starting on the left-hand side, this is the current base calculation for the April WASDE. And what that looks like, which currently estimates ethanol use at 128 million tonnes and feed use at 144.1 million tonnes. That's likely to come down. Certainly the ethanol figure is likely to come down in the May update and perhaps further again in the June update. Collectively, it's 272 million tonnes. It gives you an export / carry out of 75 million tonnes at the end of the year. If you roll that forward to 2021, assume a planting acreage of 97 million acres, a harvested acreage of 89.5 million acres, which is the 7.5 million acres that the USDA typically puts in. If you restore yields that have been more typical in recent years, 176 bushels per acre, and retain the same 128 million usage, you're looking at production of 400 million tonnes, and you're looking at a carryout of perhaps 127.6 million tonnes. If you go slightly more extreme and cut ethanol consumption by 25%, then you reduce that ethanol, the amount of corn going into the ethanol sector, to 92 million tonnes. I've also cut the feed assumptions by 20% to 115. I pushed the yield up to 178. And essentially, you're nearly looking at export and carry out of 193 million tonnes, which is a huge number. I think that's it for my presentation. I have run massively over, but I have got a question here. I don't know. Well, this is a great question, and maybe Brian, you're happy for you to jump in as well if you have any thoughts on this. In this ethanol market situation, do you think the planted area will be as forecasted, 97 million tonnes? And I'm not a forecaster. I'm not an analyst. And I don't have a set of models that I can look at and call out. But from the people we're talking to, I think the general feeling that I'm getting is that the US farmer tends to plant corn when he or she feels that there's a safe option required. And I think they probably will get close to 97 million acres. And in some of the people we've spoken to, I think they're actually expecting it to go beyond 97 million acres. I don't know how that sits with you, Brian, and what your expectations are.
Yeah, I mean, I think a lot of the planning decisions too were made before, this realized loss in demand from ethanol in the U.S. And so that's, a lot of those decisions were pre-made.
Yeah, I think that's a very fair point as well. Such as the speed with which this has overcome the industry, it was hard for them to change that and switch to something else. And I don't know that soybeans are any more guaranteed at this point either. So I've got away quite lightly there. Nobody's asking me any questions beyond that one. So since we've already gone over time, I have got one question. Tim, can you comment on the relevance of CBOT price levels in the current market? I mean, the relevance, I guess it depends how you interpret relevance in that question. I think it's clearly Chicago is still the benchmark that everybody looks at and makes decisions around. I think the relevance is that it's doing its job. It's reflecting the fundamentals the US is currently experiencing, and I'm not quite sure I fully understand the question, which is a terrible admission. But yeah, I mean, I think they reflect the fundamentals that are currently out there. They reflect the concerns that are out there, and I think it's yeah, I don't know if that answers the question, actually. If you want to clarify in what sense you mean relevance, then by all means do. What price point of corn would the farmer not be interested to plant? That's a great question. I think one of the things that complicates this, and Brian, again, if you have anything that you want to jump in on, it's my fault for saying I've got no questions here. They're all coming flooding in now. One of the things that people are also looking at is the support or the expectation that there is going to be government support, that there is going to be further facilitation programs that will enable farmers to be supported and to be bailed out effectively in the event of there being an issue. So I think that is clouding judgment as well. I don't know if there is a point at which the farmer just packs up and says, I'm not going to plant. It's all related to what soybeans are doing. And I think, as Brian said earlier, there are so much of this has happened so quickly that decisions were already made, funding was already put in place, and it's kind of, you have to work through this cycle now. Can we basically expect a global price decrease on corn due to increasing stocks? I'm not a forecaster, I'm not an expert here, but certainly the people that we talk to are expecting, I think $3 a bushel is well within reach now, and I think many people are expecting it to go below that based on those fundamentals. Is there any specific price increase in shipping lines? I'm not an expert on shipping lines either, which is terrible. I think I've prefaced all of my answers with that I'm not an expert on. I think that certainly shipping has had a very interesting few months itself with the onset of low sulfur 2020 IMO expectations and recommendations, and suddenly you're looking at oil that is a lot lower than people were expecting it. So I don't think there is a huge anticipation for specific price increases in shipping lines. And someone else has just jumped in and said bulk ocean freight prices have been trending down. They certainly have, and that's a reflection of a slowdown in activity and a reflection in the lower cost of the fuels that are going into it. So I've cleared out all of the questions. We've got nothing else. Oh, can we expect? I shouldn't sound resigned to this. Can we expect any? It's great to have these many questions. Can we expect any price down in grains over the foreseeable future? Again, I would be reluctant to go too far down the wider question of further price or forecasting for prices, but yeah, I think it's fair to say that nobody really expects prices to rebound anytime soon. I'm going to stop it there because we have gone 10 minutes over. Brian, thank you very much for your time. Thank you for everyone who has tuned in and has asked questions. We really do appreciate it. I know there will be another webinar lined up in the not too distant future, but Brian, I know it's a bit of an early start for you, and you've You've done brilliantly for us again. Thank you very much for your time. Thank you to everyone who's been tuned in and listening. Thank you for your time as well. And hopefully we will talk to you all again very soon.
Thanks very much, Tim. Thanks for having me.
No, pleasure. Thank you.